Hello and welcome to our daily Forex market analysis. My name is Schimming, and this review is for Friday, March the 15th. Now starting today, I'm going to utilize my currency strength chart, and the reason being is I think it's very important for us to see exactly how the market closed the week in the significant event that we witnessed during the New York market time frame. Now on the screen I just have the euro and the pound plus the dollar and the yen displayed on this chart currently. You can see that the euro and the pound were trading to the upside from rollover and through the London session. You can see that the dollar and the yen were trading to the downside together and from rollover through the London session. The significance is what took place shortly after the New York Open, where we started to see the yen, what it appeared to be that might just be retracing a little bit, but at the same time you can see that the pound was losing strength and ultimately the euro started losing strength. So in retrospect, looking back at this with that much yen strength, and the yen strength continued through the day, you can see that obviously a pound yen short and a euro yen short were the most ideal trades of the day. So I will ask you, is this the trade that you made? Because shorting the euro yen and pound yen would have been a superior opportunity to many, if not all, of the other major pairs in the marketplace today. Now if I throw on all the other symbols just to let you see the 8 major currencies, you can also see that we had some consistency of strength in the Swiss, which would have opened some Swiss dollar and some dollar Swiss and some Swiss yen opportunities. The CAD and the Aussie really were not in play so well today based on the average trading volume and daily range. Moving forward, let's go look at a comparison of the euro dollar and euro yen on the left side to the pound dollar and pound yen on the right side. You can see the significant difference of the euro yen trading down and the pound yen trading down as opposed to the euro dollar or pound dollar. The reason being is when the pound started moving down and the euro started moving down after it, we never had dollar strength. It was the yen that made the major turn and was the strongest single currency in the market from the New York Open on, especially after the US equity markets opened. And this is exactly the trades that we took in our trading room today, which was short in the euro yen and short in the pound yen. Now we didn't hold them as long as we probably should have. It was a Friday, but we were looking at positive trades and positive pips and very comfortable with this. But the fact is the pairs continue to trade down. Significance on both of these yen pairs were the trading at the R1 pivot level, and then when they started falling back, going down to the pivot lines pretty quickly. In the pound's case, you can see it traded through and actually came and tested off the pivot level being here, the yellow line, right about the middle of the chart. Again, this was the most significant opportunity today, and one that I hope that you took advantage of. If not, I want to caution you and give you an invitation and say that possibly you are using the wrong charting application, or you're just not looking at the market in the correct way. The significance of being able to see a clean and noise-free charting environment, disassembling the rapid price moves and looking at what's happening just to the price becomes the best opportunity for you as a trader. We're getting ready to stage a couple of weeks for guests to come into our trade room and experience what we do and how we trade and the difference of what we do firsthand. And I want to cordially invite you to register by sending an email to info@fxrbc.com, which is listed here on the YouTube page. You can also hit the subscribe button and we will send you an invite automatically. But you can see here the significance and the difference between the dollar pairs as opposed to the yen pairs. Now, we have been following along with the euro yen pretty well, largely in fact because it has the greatest average daily trading ranges. I think that the pound yen and the euro yen have been offering the best opportunities so far in 2013, and quite frankly I don't see that giving up. The fact that the yen showed significant strength today could start its movement again, and here's what I'm looking at. And if you consider some of our previous videos, you know that the yen was moving up, the yen pairs were moving up fairly significantly for over 6 months. It appeared that the euro yen specifically and even the pound yen ran out of steam over here in the second half of January, and we started to see the transitional mode kick into the pair. Once it got up over this 127 mark, it really ran out of air, and we started to see the highs become lower and the lows become lower, and the trend line that I've placed on here indicates that and shows you that very clearly. What happened was, and again, we've talked about this in previous videos, I think it sold off too fast, and so we get this precipitous drop here. The climactic move for most traders signifies the end of a downtrend, and we started to see higher lows developing. This is a very healthy pullback. This comes all the way to below 119, and being that it was over 127, that is a significant pullback in the pair. Not as much as I was hoping and anticipating that it could actually move, but a great pullback all the same, and one that we have obviously been looking for and trading on while it was taking place. So you get this pennant formation. Ultimately, the pair broke back into this consolidated range, sat here for a little while, and then has now made a new move up. Now we've got the euro yen. You have to look at both sides of the coin and think, which way is it going to break? It can't move sideways forever. And now we have the pair back in between that major support and resistance range of 126 to the upside, which you can see right here where these highs are, and then 124, a little bit below 124 to the downside. If you remember, that first significant low here came to 124. The second very strong attempt to break down was 123.50 range, and that's exactly what's happening here. Support and resistance are repeating themselves. So it would be ideal, again, I believe, if we saw the yen move back down and come test these lows, maybe even go beyond, but I think they'd be fairly healthy. However, it is consolidating above what was the trend line. And I'm a little bit concerned of whether the trend is being broken as we speak, but this is a pretty accelerated movement to the upside. I would like to see it break down. But as a trader, and as I always caution you, we have to look at both sides. We'll look at all the possibilities that may happen. Can it go up? What constitutes that? Can it go down? Yes. What constitutes that? And can it move sideways? Yes, but not forever. The longer it consolidates, the better off we are. I think this pair is consolidated enough. And the sharp rise in the yen today may again be one of those significant events that could continue into next week and bring this pair lower. What are we looking for? Breaking below the 124 and ultimately 123.50 range, and that would put it back into a downtrend, break it back into this level, and I think we could look at 122 and even the 120 level as being significant targets or areas of support that it could reach to. Ultimately, if it could get back to that 119 and break that, then we're talking about taking out the lows back here, and then we could look at the pair trading much lower. To the upside, trading back over that 126 level, 126, 127, the 127.70 range, which is the high for the pair, offers and will offer some resistance, and probably some significant resistance. It gets into uncharted territory up there. I don't think it'll be as easy to trade, but we still have to look at that as a likely scenario. It's sitting down at support right now. Sometimes in some market conditions we'd have to consider that a buying opportunity to drive it back up to resistance. But again, I would caution just because of that view, that overwhelming yen strength that closed the week. We took advantage of this today, and we've been playing the yen pairs very well for this year. And I want to invite you to come into our trade floor and learn how we're doing this, view and participate in this market analysis and trading with us live on a daily basis firsthand. This is a significant opportunity, and we're giving you an open invite. So if you have some question, post them on the video. We'll answer your questions in future emails or future videos. If you want to come into the guest session, you want to participate with us live firsthand, bringing your tools and merging them with our very simple and fairly straightforward approach, that how we actually trade the markets and how we trade the pairs and what we're actually looking for, I think you'd be surprised at how straightforward and how simplistic our process really is. The fact is, it works overwhelmingly well, and one that you could gravitate to and bring into your daily process if you choose to do so. Just drop us an email at info@fxrbc.com or look us up on the web at forexrangebarcharts.com. My name is Derek Schimming with forexrangebarcharts.com, and as always, I want you to have a great day trading. I look forward to seeing you during our guest sections. Thank you.